Dan Dicker, you're usually not a fan of exchange-traded funds, ETFs. You usually pick individual stocks.
Right.
But right now you like the XES, which is the Oil Services ETF. Tell me why.
Well, oil services has been a very mixed bag. Been very difficult for me to find who's going to be the big winner in oil services, despite the fact that we have an enormous increase in particularly land-based drilling. So some of these guys are going to make a lot of money, and there have been a lot that have been dogs. And finding the right one has been very difficult, even for me, who's a professional. Now, what I like about this particular ETF is that they're very small cap based. What they basically do is they take 49 of the top of oil services companies and they weight them equally. Each one gets a little over 2% of the fund. Now, that allows you to get a very wide kind of shotgun approach at a bunch of oil service companies, especially land-based ones, some of whom have been very, very specialized, done very, very well in 2013, and I think with oil prices staying high, will continue to do well in 2014.
And that is opposed to the OIH, which is the traditional ETF, which is the Market Vectors Oil Services ETF. And traders have been using this for a long time. But that one really overweights some of the big players like Schlumberger and Halliburton.
Exactly. The big three, Schlumberger, Halliburton, and Baker Hughes, make up a very large proportion of the OIH. And to be fair, I mean, Halliburton's had a tremendous year. Schlumberger has been pretty awful. And, Baker Hughes has good times and bad times, some good times recently. And when you get that kind of overweight, particularly on something like Schlumberger and the big three, you're playing very much a mega cap kind of game. And in oil services, when the technology is getting more and more specialized, I think there's better value to be had. If you have some of the smaller players, if you have some like Key Energy Services, or you have UTI, Patterson UTI, or HP, Helmerich and Payne. These are the smaller players that have done tremendous work, particularly land-based, and they're the ones that you get when you get this smaller cap focused ETF.
Thanks a lot, Dan Dicker.
Right, thanks, Greg.
Thank you for watching The Street.